Form 1065. It's scary. I know it is. It can be very complicated. Partnership taxation is one of the most complex topics within the Internal Revenue Code of the United States. And yet, if you're working with the right professional, it can be navigated properly. It can unlock tremendous benefits for foreign-owned, multi-member US LLCs. Hello, my name is Javier Correa. I'm the tax director here at the Rothbard Group, and I'm also a licensed enrolled agent, fully admitted to practice before the Internal Revenue Service. Let's talk Form 1065 and multi-member LLCs. So the first thing you have to understand is the Form 1065 is a partnership tax return. So you're going to be thinking, well, Javier, if I own a multi-member limited liability company, why are you talking about a partnership tax return? So the first thing you have to understand is that limited liability companies are a creature of corporate law. You form them at the state level, and it's just the kind of entity that you are operating from a corporate legal business perspective. However, the tax treatment of the LLC will depend on its classification for federal tax purposes in the United States of America. An LLC can be taxed in four ways. It can be taxed as a disregarded entity, what I call ghost LLCs that simply do not exist for U.S. tax purposes. That's when they are single-member LLCs without a corporate election. They can also be taxed as partnerships. That's the default treatment for multi-member LLCs, again, unless a corporate tax treatment is elected by the partners voluntarily. If all the members are American, you could make an S-Corp election, which is largely out of the scope of this video because this is for foreign entrepreneurs and investors, but just for academic purposes, know that it exists, an S-Corp election. And the last one is a C-Corp election. So when you want your LLC to be treated as a corporation for U.S. tax purposes. So LLC is a corporate creature. It's a legal form for your business. The tax treatment that follows will depend on the classification of your LLC. So, if you have an LLC that has two or more members, by default, it is treated as a partnership for U.S. tax purposes. Hence why you have an LLC filing a 1065 partnership tax return. Now, partnership taxation can be very complex, and this is because partnerships are a hybrid. They are a pass-through entity, so it's similar to a disregarded entity in that income flows through the entity all the way to the owners, to the members of the LLC. Unlike a corporation, the partnership itself at the entity level is not liable for tax. Rather, each individual member of the LLC or each individual partner of the partnership is the one that is individually responsible for the tax liabilities that arise from their own individual allocations of the business's profits, losses, and so forth. So as you can see, it already starts becoming a little bit complicated. It's not as clear-cut as the corporation where, the entity has money and then essentially there's a dividend, and then upon the issuance of a dividend, I'm the one who gets the money. No, here there is a bit of a pot where everything is mixed in together. You and the entity are kind of like one in the same when it comes to taxes in a way, but not entirely. Right? Because the entity itself does file a tax return. The entity itself does keep track of gross revenue, expenses, deductions if there are any, salaries paid out obviously to your workers. In the case of partners, for example, you can receive guaranteed payments, which is a whole other creature in of itself, which is payments that are issued to members of the LLC or partners of the partnership that do not depend on the profits, which could be akin to the salary that a manager would get in a corporation. So think about the fact that in a corporation, you can be a shareholder and you can also be an employee of the corporation. Well, in the partnership, you can be a partner and you can also get a guaranteed payment in addition to distributions, right, of profits from the partnership, right? So it's more or less similar to what I explained before in the case of the corporation. So all of these things will be fully reported on Form 1065. Now, Form 1065 also has a series of schedules attached to it. There are a couple of schedules that are essentially basic. So I would say for foreign-owned multi-member US LLCs, you definitely want to make sure that your accountant or your enrolled agent is filing your 1065 with schedules K1, K2, and K3. K1 is the most basic one. So the K1 schedule is essentially the document attached to your 1065 partnership tax return where whoever prepares it is going to indicate, we made $3 million in profit. Sam is a 1/3 owner of the partnership, so we've allocated $1 million of profit to Sam as our partner. That is going to be one K1. So for example, Sam gets a K1 indicating $1 million in profits allocated to him. Okay, that's for example, the example of the K1. But then because we're talking to foreign entrepreneurs and investors on this channel, right, if you are a foreign entrepreneur that is a non-resident alien, so somebody who's a non-US citizen, non-green card holder, and somebody who doesn't meet U.S. tax residence under the substantial presence test, or maybe you're a foreign corporation that is a partner in a U.S. partnership. So it can be a Panamanian corporation, for example, getting that K1 from the US LLC. So because there's a foreign element involved, you will have to file schedules K2 and K3, which are specifically designed for the foreign element of the US LLC. So if you have any foreign branches, if you have any foreign income, any kind of foreign operation, foreign partners, that's where schedules K2 and K3 are going to come in, and they're going to zoom in on those international elements. Now, the nuances of those can be very complex. So here I'm just going to give you an oversimplification. Just know if there's an international element, K2 and K3, very important. And then those are going to match up then with the K1 that is going to combine the overall allocation. So if you have any mixed revenue with both domestic and international revenue, that's going to be mixed into your K1 that then allocates the share of profit to each individual partner, right? In addition to that, there are some other schedules that you may have to file with your 1065 depending on how large your partnership LLC is. So for example, you have schedules, you have the L, you have the M2, the M1. All of those will vary depending on how large your partnership is, right? How much money, how much you own in assets. Those can be also very complicated, very detailed. So I'm not going to go into all of the minor elements involved in those schedules, but just keep in mind that they're there. You want to make sure that those schedules are taken into account. Maybe you have to file them, maybe you don't, but keep them in your radar. Now, why is the 1065 overall so powerful, and why is it worth it, right? Because probably you're thinking right now, oh my God, Javier, this is so complicated. My brain already hurts, and you've only simplified. You've given me a simplified version of what the 1065 actually is. Why would I even want to go down this route? Well, the reason why you want to go down this route is that the fact that it is complex, the fact that it imposes corporate hygiene, where you're tracking revenue, expenses, allocation to partners, capital accounts, which is something else that you have to keep in mind when you have partnership taxation LLCs. All that creates a genuinely well-run, by default, entity, right? So unlike the single member LLC that is so simple that it could very easily trigger alter ego claims, piercing of the corporate veil, commingling of assets, because let's face it, the single member LLC is so simple that it doesn't impose any good corporate governance. You don't even have to file a separate tax return. Nothing. All you do when you're a foreign owner of a single member US LLC that generates no US taxable income is file Form 5472. And Form 5472 and 1120 pro forma, essentially that is an informational report. It's a form that reports certain related party transactions, but that's it. You're not reporting your full spectrum when it comes to tax information for your company. Form 5472 is not a full tax return, whereas Form 1065 is. So when you have a multi-member US LLC, you are getting better corporate governance by default. You're getting US tax residence, but while you can also preserve US tax neutrality, when a bank asks you anywhere in the world where you file your taxes, you can clearly say the United States of America, and you can actually show a full US tax return. Now, what happens beyond that 1065 is your business. If genuinely the partnership LLC generates no effectively connected income, no fixed determinable annual predictable income, so no US source income in general, and there's no income that can be reattributed to a US office, US dependent agent, US branch, or so forth, then you genuinely have a US company that is a US tax resident that files a full US tax return that looks pretty intimidating, that looks pretty large, so banks will respect it, that has access to the US banking system, that has a full US identity, and yet that remains fully tax neutral from a US tax perspective with the proper planning. So overall, yes, it is a bit more complex, but if you work with the right professionals that know what they're doing, because again, partnership taxation is one of the most complex elements out there in the Internal Revenue Code. But if you're working with somebody like the Rothbard Group, I personally have been working with multi-member LLCs for almost 10 years now. And I have learned these partnership tax returns, back and forth, front and back, up and down, anything there is to know. I have done this. I know it can be done properly. And when a partnership LLC is leveraged in the correct manner for a foreign entrepreneur investor, it just unlocks so much power that a single member LLC ever could. So again, more asset protection, more robust identity, U.S. tax residence without necessarily triggering U.S. taxable events. If you have the proper planning, you can get the best of both worlds. And trust me, when you're under audit, when your country of tax residence wants to know, where your business pays its taxes, when you're opening bank accounts around the world, when you need to show a source of wealth, you're going to be very happy that you have those Forms 1065 going back years from the moment of inception of your company to show a clean track record of where your money comes from and what your business does. And when your company is a U.S. tax resident, usually nobody bothers you. So 1065, it's difficult. It's challenging. There are a billion details that you have to keep track of, but ultimately the upside is enormous, especially for foreign entrepreneurs and investors and foreign corporations that want to have an access to the U.S. consumer market. And hey, if you're thinking, Javier, I don't even have a business partner to even do a multi-member LLC, guess what? There are ways around it. We can start a foreign corporation that you also own. And so now the partners of the multi-member LLC are you and your Panamanian corporation. That can perfectly be done, and it can be done in the right manner. So if you want to understand how a multi-member LLC can open more doors than a single member LLC ever could, and you're ready to work with the right professionals to guide you along this perilous but rewarding journey, look no further. Rothbardgroup.com. And I look forward to working with you. Thank you. See you next time.